Good day, learners and educators for EMS and economics. Well, my name is Kaden Mazokere. I'd like to welcome you to this special lesson where we're going to discuss the budget for 2021. The reason I'm doing this lesson is because the budget speech that was presented by the finance minister is very, very important when it comes to our syllabus. From EMS, we encourage learners to watch the budget and so on. So what I'm going to do in this lesson is I'm going to discuss some of the key things that were presented by the minister. Now, the reason, if we look at this whole budget, it's basically the fiscal policy, because the fiscal policy has we say two instruments, but we can say three. We have tax. You'll see in the budget we talk about tax. We have government spending, and we also have government debt. So those three we're going to discuss in this lesson. Other subjects, not subjects, other topics are covered in this. You'll see that there are areas where you can say, oh, these are business cycles. You'll see where we are talking about forecasting, we're talking about economic activity, growth, and so on. You'll see that we'll talk about GDP. So GDP, we can say it's secular flow if you want. We'll talk about the macroeconomic objectives. You'll see them, but two of the macroeconomic objectives are not really covered by the budget speech. Maybe those ones could be covered by the governors. When the governor meets the MPC, the Monetary Policy Committee, and they make adjustments on the repo rate, that can, yes, cover two macroeconomic objectives that the budget speech doesn't necessarily cover. Well, the macroeconomic objectives that I'm talking about, we have economic growth. Now, with economic growth, you will see that it's one of the things that the minister kept stressing on, economic growth. Then full employment, well, talks about employment a lot. Now, the only two that I would say they are mainly dealt with by the governor, it's exchange rate stability and price stability. Then the last one that this budget speech covered is economic equity. You'll see each time I come across something along those lines, I'm going to highlight that. All right, so let's dive right into the lesson and see how this can be helpful. Well, I took some topics, not everything, but I took certain things that I felt like these ones are worth talking about, okay? Because I didn't want to take the whole speech. I took key things that I felt like, wow, let me talk about this, let me address this. If you want, yes, you can take the whole document and go through it, but maybe some things may not be as important. Now, in the short, like, they are important, but what I'm trying to say is they may not be, in line with our syllabus as much as the things that I've selected. All right. So here it says restarting the engines of sustainable growth. Just that heading itself, you will see that we have this thing, sustainable growth. But I would say the main word is growth. Economic growth is one of the macroeconomic objectives, and you want to think it's the most important. I believe it's the most important because it leads to many other good things like economic development. Our ability to make more goods and services within our country will improve our standards of living. So that if our standards of living are high, that is a good opportunity for us to deal with other problems that can arise. For instance, we have less socioeconomic problems if our economy could grow. So you see that government will mainly be talking about growth. But in this case, they are saying growth that is sustainable. So what they say here, they're basically talking here about free vaccines. I highlighted the free of charge to try and show that, okay, everyone is going to get access. So I think the element of our macroeconomic objectives that is being touched here is the fact that there is equality. Government is trying here to bring equality in the economy. So there won't be people who say we couldn't get the vaccine because we could not afford it. All right. So then the next one here. The 2020-21 government, in 2021, government responded to the pandemic by allocating approximately 20 billion rands in additional funding to health sector. So to what had been tabled in last year's budget, they added an additional 20 billion to help assist. So all this is part of government spending. Right. While real GDP, well, what is real GDP? Real GDP is what I explained in one of my videos. You can check it out. Real GDP is what we call GDP at constant prices. So the opposite of real GDP is nominal GDP. You can see here the finance minister yesterday. Oh, fine. You might be seeing this days after. So let me not say yesterday, but yes, I'm doing this. The budget was presented yesterday. So while real GDP, which is the opposite of nominal GDP, and nominal GDP is GDP at current prices. So real GDP is estimated to have contracted. So this shows that it shows something like this, okay, like this. And obviously everyone expects something like this. And when we're talking about business cycles, this will be our recession and our depression, right? It's a downswing. So it went down by 7.2%, as you can see there. All right, 7.2% in 2020. It is expected to reach 3.3% growth. Now, when we say 3.3% growth, what are we talking about here? We are talking about forecasting. So you see that economists are trying to forecast what is going to happen. Now, there are things that that is telling them to come up with these numbers, and those things are what we call leading indicators. So do you see that our budget can blend very, very well with the things that you learn in the syllabus? Okay, so reach 3.3% in 2021. Like I'm saying, it's forecast, right, before moderating to 1.6% growth in 2023. So this whole thing is forecasting. Okay. The fiscal position, which was already weak. So what they're saying here is, of course, when we say our fiscal position, we're referring to the taxing system, like the income or that government gets, through their various ways of getting revenue. So they're saying here, the finance minister here was saying that was already weak, the fiscal position, like they didn't have as much money, things like that. So before the current crisis, so the current crisis is obviously the COVID crisis, has deteriorated dramatically, requiring urgent steps to avoid high and uncontrollable debt levels. So our fiscal position was bad prior to the COVID pandemic, and so government really has to do something to try and avoid uncontrollable debt levels, which is a good thing. Okay. Capital spending, and we call this one capital formation, right? If you think about, if you go back to our methods of calculating GDP, and you see that there's gross capital formation when we're talking about the expenditure method of calculating GDP. So capital formation is the fastest growing component of non-interest spending, and I like what I'm seeing there, because I think capital formation is very, very important, because it's something that can lead us to this term here, sustainable growth. Because basically, capital formation is our ability to invest in in machinery, let me put it that way. So it puts us in a position where we can be able to manufacture as a country, instead of getting handouts, instead of getting things from other countries or something like that, or relying on government to give us things. Capital formation is that process of investing so that we can be able to manufacture or do things like that. Okay, I think you get it. So the main budget primary deficit narrows, which is a good thing, from 7.5% of GDP to 0.8% of GDP by 2023. And gross government debt stabilizes at 88.9% of GDP. This word is important, stabilizes. So it doesn't go out of control, which is a good thing. Right. At the same time, the 2021 budget reduces the tax burden, which is a good thing again. But remember, there was a lesson I did when I was saying there are rumors around an increase in tax and all that, and it wasn't just rumors, because here the Minister of Finance is saying there was a relief, you see. At the same time, the 2021 budget reduces a tax burden, withdrawing. So they had plans to increase tax by 40 billion. How do you increase tax by 40 billion? You simply increase tax. And it's normally the opposite of what I was saying, you'd want to hear, which is during times like this, you want to see government stepping up and increasing spending and reducing tax, which is what they did here. They gave that sort of relief, but it might not be as big. You'll see when we go to the tables there just now. Okay, let me not spend much time here. South Africa's fiscal challenge is to balance the immediate need, which is always a problem. The immediate need for support to the economy during the pandemic, with ongoing efforts to close an unsustainable and pre-existing budget deficit. All right, to grow the economy and reduce unemployment and poverty by half. I don't know how, but and obviously this will be very, very difficult. By 2023, capital investment, again, that thing, by both the public and private sector. So obviously they'll have to work hand in hand. And yes, that is, despite the challenges posed by COVID-19 pandemic, government still prioritizes infrastructure spending to stimulate economic growth and reduce unemployment and poverty. Over the next 3 years, government will spend approximately 791 billion on infrastructure. That's capital formation. Government is creating an enabling environment for effective partnership with private sector. So the public sector is going to work hand in hand with the private sector, which is going to leverage their skills and expertise and increase the pool of resources available to fund infrastructure. So it's a good thing. All right, consolidated government expenditure, which is the G, over the medium term is projected to be 6.16 trillion, a decrease of 20 billion rands from the previous year consolidated budget of 6.18 trillion. So this is mainly because of the proposed reductions of more than 303 billion in compensation spending from. So with this, you might want to think that, oh, this is bad, but the things they were targeting are maybe, let me put it as unnecessary spending. All right. this is where I was rushing to. So as you can see here, this went up from 1,860, which is state old age grant. So basically, I'm not going to spend time here. You can see what happened to our social grants. They went up basically, and you'd expect them to go up because there's that thing called inflation. Okay, so no surprise there. All right, let's come here. Here we now comparing 2020 with 2021. So what happened to taxes? No, not taxes. This is where the income is coming from. So the money that was collected, let me put it that way, or the money that was collected here, and maybe I would say the money that is expected to be collected. So there is going to be a drop in terms of what they expect to collect from us through taxes, which is 1.3 billion. No, it can't be 1.3 billion. Okay, it's 1365, then there's billion. That means so many zeros. So this is 1.3 trillion. Actually, it's 1.4 trillion, because if I'm reading it like this 6 is greater than 5, so it will make this one a 4. The reason I'm saying this is a trillion is because we have a billion here, and so that means we already have 9 zeros here. Then we add these, so this becomes 1.4 trillion. Okay, so 1.4 trillion, but you see it's going down from 2020-21. Right, then we go to borrowing. Borrowing is going to go up. You see here it was 370, then it goes to here 462 billion. Now this is billion, because you can't read this number as billion, because you say what, 1,365 billion. No, this is 1.4 trillion. Okay, so this is borrowing. It's 482 billion rands. Okay, then non-tax revenue, which is other ways in which government will make money, goes down again to 32 billion rands. Okay, so that's the comparison between 2020 and 2021. All right, then this is how government is going to spend, and obviously this expenditure is done from the 1st of April to the 31st of March. We call that our fiscal year. All right, so social development went up. Okay, it contributes 16% of the entire expenditure. So social development is actually receiving the biggest portion on our spending. Okay, then this here is education. So education is receiving 272 billion, which is 13.5% of the entire expenditure. Debt service costs, 13%. Health, 12.3%, 248 billion. It went up again, so all these went up. Community development up again, 218 billion. Peace and security down. Economic development down. Post-education training up. Okay, then we have how do the personal income tax changes affect you? All right, I'm going to take a bit of time explaining here what's going on. Right, here it says the 2021 budget provides, I'm reading here, okay, provides tax relief by announcing an above inflation increase of 5% in personal income tax brackets and rebates. Okay, here I'm just going to address this one, tax brackets. Right, so the amount an individual can earn before being required to pay tax is adjusted as follows. So what it means is, if you are between the ages of, below the ages of 65, which is what I used or am going to use in an example, it has gone up from 80 83,100 to 87,300. What this means is any income earned by anyone who's less than 65, if their income per annum is less than 83,100, that income is not taxed, will not be taxed. And so the income that will be taxed is income that is above this one here. Okay, so they've increased our threshold. So that means this is what we had before. So now your income will not be taxed up until 87,300. So if your income is in a year is 86,000, for example, so it is exempted from paying tax. But last year it would, but what they'll tax you is the difference between your income and the threshold. So the threshold was 83,100. So now it's way above that, it's 87. So that means this person would pay tax last year, but now this person who earns this will no longer pay tax because the threshold has been taken up to 87,000. That's what it means. So it doesn't just benefit those people who earn less than 87,300. It benefits everyone. In what sense? In the sense that for everyone else who earns more than 87,300 in a year, they'll be taxed an income above that 87 going on. So the portion, the difference between 87 and 83, that portion will not be taxed on everyone. I hope you understand what that means. All right. So if you were to make some calculations, like I did it just to check, for the difference will be if someone earns 21,620 per month, that person will save something like 756 rands in a year. Okay, it's not significant. If you check, I don't know, it's less than 100 rand a month. That is the relief that they gave. Okay, it's not significant. I don't know what you want to say about it. I'm so sorry. Always doing these videos at night, so you get tired, and yeah. Anyway, moving on. This here is something I would say it's a positive thing. If you have a look here, everything went up. Everything went up. Everything which is alcoholic. Now, this is a good thing in what sense? In the sense that we all know that goods like this are we call them demerit goods. So these demerit goods, what can I say? They are bad. They have a negative externality. So when government increases these sin tax, you see they even call it sin tax. We also call them excise duties. Now, if government increases this, it means there's going to be less consumption. It's going to reduce consumption of these demerit goods. And so it's a good thing because the external cost that they have on the society is big. So the less we drink, the better it is for the community. Right. So that's this part. And then we have fuel levies. The difference here, again, this means that there will be it will be more expensive for us to travel. So this one will lead to inflation in a way. So the general fuel levy will increase by 15 cents per liter. That is something which is not good, according to my opinion. Okay, in a way, it is good on another side because of the road accident fund in a way. Because I think, yes, and the road accident fund levy will increase by 11 cents. The good side is yeah, more money for compensation to those who get injured on public roads. That is the side that I would say it's a good side. All right, then we come to individual income tax. Like you see what I was talking about when I was showing you the thresholds. So here it says taxable income, right? Everything went up here, but what went up is the bracket. Take note. What I mean is, look here, it was 0 to 205, it's now 0 to 216. Then like that. So if you check, everything went up. If you compare 2020 and everything in the taxable income, the brackets changed. That's what I'm saying. But the percentages stayed the same. Look here, 18, 26, 31, nothing changed. So what is that relief that the minister was talking about? Well, the minister comes, like I explained already, where like what is going to be taxed is that income above, I forgot the number, but it was around 87, I think it was 87,300. Oh, sorry, 87,300. So you pay zero from 0 to 87. Then from 87, so if you want to calculate that, is 216,200 minus 87,300. The answer that you get here, you say times 0.18. So what you get here is the tax that will be paid for someone who earns let's say 216,200 in a year, because that's the figure that I used, right? Yes. And if you want to do it for someone who's earning in this bracket, that person is going to pay 38,000 first and foremost, and then plus 26% of any income which is above 216. So that's basically what it means. But I want to believe also, if you calculate this one, you probably will get 38. I'm not sure. You probably will get this, because that is what this person pays first before they start paying tax on income above the 216,000. Okay, moving on to here they made a mistake. It says here 28, but the minister announced that it was 27%. So our corporate tax went down from 28% to 27%. This is a good thing. I say so because it will be good to, what do you call this? It will be good to those companies, to investors. So investors will not be taxed that much. So people in America would want to invest in South Africa. Because of this decrease of 1%, because it means that they won't have to pay more tax. Okay. And then moving on to small businesses. So small businesses that get this profit between 0 and 87, they don't pay any tax for this income here. Income between 0 and 87. And then here nothing changed if you compare this side and this side. So that's what I mean here. Okay, so here, what am I saying increased? What was increased is the bracket, basically. That is the bracket. So between 0 and 87,300. So zero tax. Any income above 87, you start paying 7%. And then you pay this plus 21% and so on. If you want to analyze this, you can see that these small businesses, they are paying less tax than an individual who's working for a salary. Okay, because that person will be paying already on income above 87,000, they'll be paying 18% already. So if you check, you'll see, and the maximum here is 28%. I think it should be 27%. All right. Then the last part, which is on micro businesses, you see that they don't pay anything from 0 to 335,000. They don't pay anything. And income between this and that, they start paying only 1%, and so on. So you might want to start a micro business and take advantage of these tax rates, because the most they can pay is 3% plus this 6,600. That's the most they can pay for any income above 750,000. All right. You can ask questions if you want. Comment down below. And this is a special video that I just did to make some discussions around the budget and how it relates to our syllabus. All right, thank you so much. You can join me in the comments below and we can have a discussion.